Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, June 1st, 2011, is brought to you by Realtic. All right, folks, we're going to get right into the mix today. We have a fair amount to go over. The markets are taking a substantial hit today. Dow is down 191 points, 1.5%. NASDAQ is down 34, S&P down 20 on the day. So basically 1.5% drop across the board on the indexes. Why, you may wonder? Because essentially the economic news continues to be atrocious. We're seeing, for instance, the ADP Private Sector Employment jobs number that came out today, folks, which was estimated to be 190,000. It came in at 38,000. These are private sector jobs created last month, in the month of May. All right, now what is so negative about that? Well, obviously, you're looking for a large number of jobs to be created. If that happens, then people are going to spend more, the unemployment rate drops, everything starts getting better and better. When you have 38,000 being created here over the last month, that is an unbelievably bad number, especially with QE2 still going on. And this is the big point that I've made to my members in the Research Center and Intraday Stock Chat. Remember, you can always take a free trial here. When you have QE2 going on, which is, again, the printing of trillions of dollars essentially and flooding it into the markets, the Federal Reserve has been doing this for years now, there's no reason why there should not be a better recovery if it was working properly. The fact that it's not working, especially when it's still going on, just think about in June when it finally ends. This month, QE2 is done. It's used up. The $600 billion that they said for QE2, it is kaput. Done. All right, so you take that away in later in June, then think about a jobs number. I mean, if you're just making 38,000 on private sector right now, what's next month after this ends? What's the month after that after it ends? Now, again, does this mean QE3 is going to come? Well, it does possibly. I mean, but as of now, we're not seeing it working anyways. So, again, we call this, Nick and I call this, chief market strategist here at InTheMoneyStocks.com. We said this was going to happen anyways. So it's not really a surprise to us. We've positioned ourselves and continue to make tons of money in this market. And remember, free trial to the Research Center. I encourage you to join it to hear our thoughts and take our trades each day, each and every day. But this is not what the market wants. The ISM number came out today, very, very ugly ISM number. Economic number over the last couple months. We've seen jobless claims move back into the 400,000 level. It's really like a drug addict. And I look at this like a drug addict, folks. Before we get into the charts, as you can see, the markets are essentially at their lows of the day. Think about this. This is the one thing I want to leave you with before we get into the charts. If you're a drug addict, and we've all seen it on TV or know a friend, unfortunately, with the addiction, but essentially, if a person that takes drugs, you start out with a drug and it works, makes you feel great or whatever it does and gives you that high. And then ultimately, over time, the same amount of the drug loses its effect on you. You don't have as much of a high anymore. You need more and more. Well, we've seen the same amount of drug being instituted into this market through the QE2 policy, but now later on towards the end of QE2, it's not having the same effect. And it's just like a drug addict. And just imagine when the markets go into withdrawal. When this is all done, when they take away that QE2 and there's no more, think about the effects then. I mean, it's really asking for another double dip in this economy, and I hate to say that word, double dip, but it does look like it is a possibility unless they come out with QE3. But the negative of this is, I mean, QE2 is bad enough because of the inflation it caused in commodities. Imagine if they keep on doing this. I mean, if you're not getting a bigger bang for your buck here from QE2, you cannot do QE3 in good conscience because of the hurt it puts on the American public with the inflationary pressures. I mean, we've seen gold, we've seen oil, we've seen silver, we've seen commodity prices like grains go sky high over the last couple years. You can't keep doing this. The middle class, the lower classes, the poor in this country, the poor around the world are getting crushed. So again, spiders are hitting the lows of the day here. We are going lower. The next scalping opportunity is going to be looking like it's right here. There's a little bit of a pivot area right here at 132.65. That'll be your next spot. The markets again gapped slowly down and then just started to sell. Small bounce at this first area here. It's a good secondary bounce right here. A good scalping day. I have to say, very good scalping day in the intraday stock chat. There were plenty of scalps out there for us to take. And again, that's what it's all about here on an intraday basis. For the Research Center subscribers, we unloaded basically all our longs yesterday for big profits. Many of the Research Center and intraday stock chat people yesterday, based on swing trades, had their biggest trading day, profit day ever in their lives. All right, that is amazing. Today, I had one long left in the market, which was MOTR. I'm stopped out flat on that. No harm done. I have no more longs aside from a couple small caps. One of the small caps actually doing very, very well today. Aside from that, I'm holding SDS, which is a short ETF. So I'm more short the market now. SDS, look at this move up in this. So I'm long SDS, which is short the market, and that's paying me beautifully today. My entry a couple weeks ago was at $19.95, I believe. That was the entry. And you're at 20.72. I've already sold half of the position on the last move up for about $1 and change. I'm still holding a half position of SDS, and essentially I'm in cash, a lot of cash right now. I'm looking for good chart setups in the coming days, which I will be putting out on the hot charts and alerts, which are part of the research center. So you got to join up, take the free trial in the very least. You know, people are taking the free trial and they're basically staying with us for years at this point, it looks like. I mean, because of the money they're making. In 1 week of free trial, they're making enough money to pay a subscription for years of the research center, and then just think about the money they're making over the course of the next few months and years. All right. Going back to the SPY, folks, again, it was a good 3-day move. We called this, and this was another call we nailed, folks. Back when we were trading down to this area, this was a key gap fill. If I go to the 60-minute chart, you can see this beautifully. Take a look down here, folks. See this gap fill right here? See this pivot high on the SPY, which mirrors the S&P 500? Look at the gap fill right there. When we hit this level, I said, guys, buy stocks long. There's going to be a 3 to 4 day rally into the first day back of the holiday, which was yesterday. Why? Because you had lighter volume. You have the Federal Reserve doing their POMO. You have the holiday effect, which means the markets generally float up into the holiday. You have a master level hit on the charts. All signs were pointing to an upward move. We nailed it. Bam, 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 bam. Hold for 3-4 days. Make tons of money. Then yesterday, unload your longs, guys. Unload your longs. Market again could be pulling back and pulling back motion, and that's exactly what we're seeing today with a monster drop on the spiders, down over $2 right now. Dow Jones Industrial Average is now down over 200 points as we're speaking here, down 200.5. NASDAQ down 38, S&P down about 21 points on the day. So again, it's been as accurate as it can be. If you're playing these trades, if you're playing this market calls, you are in good shape. While pretty much everyone else is just in a lost state of mind right now out there trying to figure this market out. We'll be the ones on top, and it doesn't matter what market it is. I don't care if it's a bullish market or a bearish market. We're going to make money. Bulls make money, bears make money, we make it all. You know? It doesn't matter. All right. Again, if you come down here, here's your daily support level. This will be your daily support level. It's interesting here because you came right to this little pivot top. See this little pivot top right here? Let me draw that a little straighter right there. That's where you went up into yesterday. You touched it briefly today, and then you've reversed. That was your little pivot, and sure enough, the markets have come down. A close below the 50 and the 20 doesn't mean a significant amount because you haven't confirmed yet, but if it does, then you should retest this low. If you confirm below the low, look for major correction in this market. If it doesn't confirm below this blue little cross I put in right here, then you actually could bounce around here, and we'll see again to watch that and be ready for the trades based off of what happens. Going back to the intraday, what I want to do is touch on the dollar. The dollar is up now on the day, and this is really what's been hurting the market. Initially, the dollar moved lower, but because of the economic news, the dollar really was not helping in a move lower of the markets. Usually, the dollar goes inverse, so if the dollar goes lower, the markets are actually doing pretty well in a usual scenario. But when you get the type of bad news that we got this morning, nothing's going to save this market. And again, the markets went down, and then all of a sudden the dollar started to go up, which is more negative for the markets because an inverse dollar move to the upside would mean markets were going to go down. And that's exactly, look at the dollar hitting the highs of the day, and that's exactly why the spiders just hit the lows of the day. So understand the moves here. We do have a couple strong stocks out there. I want to just point out Apple Computer is up 75 cents. It's not up much, but considering the Dow's down 200, that's actually a pretty solid showing on Apple. Amazon is down a little bit today, but not down that much, down about $1.85. Another stock that is doing pretty well today is Google. Google's trading up $1. Now, it's not a big move on Google, but the fact is, again, with the Dow down as much as it is, S&P and NASDAQ down what it is, that's actually a pretty solid move on the markets. So we'll keep our eyes peeled on that. Taking a look at a couple other key stocks out there. Cisco's down, Microsoft's down, pretty much everything's getting hit aside from those few that I mentioned. Even Chevron and Exxon. Chevron's down over $2, $2.40, and Exxon's down $1.25. That's a big drop. Goldman Sachs, by the way, Goldman Sachs was one that I sold yesterday, basically at the 141 to 142 area on the charts right here. This is where we unloaded Goldman Sachs, just in this area. Look at the reversal today. All right. I mean, talk about knowing where to exit, not getting greedy. That's exactly what it is. It's called market discipline. This is what we teach. We teach proprietary techniques. We give out trades, long and short, market analysis, learning and educational and proprietary techniques. I mean, it's all there for you guys inside the research center, inside the intraday stock chat. So, again, folks, fun day today, good scalping day. Yesterday was a better swing trading day with huge amounts of money made, and that's the key. You want to just be able to be ready for the next trade, whether you're a swing trader and an investor, which is for the research center, or an intraday trader, which is more for the chat room. Take care, guys. Let's make some more money this afternoon like we've been doing.